How's it going, guys? I am not a financial advisor, but I would like to inform you guys on some key terms that would help you guys invest in the near future. The S&P 500 year-to-date return is basically the top performing 500 companies in the stock market in the S&P 500, and what they do is you get basically a little bit of all the best performing stocks, and on average that will do better than bonds and CDs will. A bull market versus a bear market. When the bull market is bullish, that means that it's doing good. The market is it's a good investment. A key time to when you know it's a bull market is when a big player, for example Nvidia, a $4 trillion company, is doing good. You know it's a bull market. When it's a bad market, bear market, you want to hold cash portfolios and wait until it's the right time to invest. A Roth IRA versus a 401k, and the tax advantages you can have with holding a Roth IRA compared to a 401k. A Roth IRA has a 10% tax versus a 401k that has a 30% tax penalty. So if you invest into this account and you withdraw your money, you're gonna make a lot more money here because you don't have to pay $3,000 out of those $10,000 or $6,000 out of those $20,000. Your portfolio can be a cash portfolio or it can be a stock portfolio. It can hold different funds, and like I said, mentioned before, the SP 500 is a really good if you want to just play it safe. On average, they do really good year to year. Dividends. Certain stocks do pay dividends, but you're not going to see those changes as fast as you would if you would have invested in the S&P 500. Government contracts. Usually when the next president comes into election, you want to know what he's investing in, what he wants to focus on, because that's what's going to receive the biggest investments. So that's a big one. For example, Trump was very into the Space Force. So if you would have invested into aerospace companies before the presidential election, your profits would have been very good. The Federal Reserve interest rates affect how the stock market does overall, and as well as tariffs. So if the stock market isn't doing good, it's probably because these factors over here are affecting it. Cryptocurrency and Bitcoin halving. Cryptocurrency can be a little bit more dangerous, especially if you're investing into meme coins, but it's shown the greatest amount of profitability. Every 4 years, Bitcoin reduces the amount of profit that the miners can make. After a certain amount of time, they won't be able to mine any coins, but every 4 years, it basically becomes harder for them to profit, so the price goes up. Capital gains. Whenever you sell a stock, you have to pay taxes on. Whenever you make you want to withdraw X amount of money off of your 401k and Roth IRA, you have to claim those capital gains, and then that's when you have to remember what tax account you're in, and that's why I mentioned it's better to have a Roth IRA versus a 401k, because you're only gonna get taxed 10% versus a 30% in this account, and you're better off investing in what you want to invest in. And if you want to play it safe, like I said, an S&P 500 is a really good plan versus a 401k where they're investing your money for you and they're not giving you all the money that you would have made if you invested yourself. So basically, the next presidential election, look at what the president wants to invest in and develop, and odds are those are going to be your best investors to make a profit off of what still makes America great again. It's companies. Nothing has been increased, our wages haven't increased, but stocks have still maintained their currency, their financial power. So if you want to get ahead and become financially literate, these are good terms you want to look over and familiarize yourself with.